I think that really it's tremendously helpful when you have a president that talks about lower interest rates, talks about how stock markets should be going up, throws some protection over to the agricultural producers regarding what's happening with tariffs. So I just think there's just a lot of positive sentiment out there coming from the administration, even willing to talk about the Federal Reserve in terms of where the Federal Reserve is headed.
I got to cut you off because it's so interesting to hear all this, because on CNBC, ever since the president started criticizing the Fed, talking about how he'd like to see a weaker U.S. dollar, threatening more tariffs, and working on a bailout for the farmers. There's been a ton of criticism around all of those policies. You're saying it's actually constructive for the markets.
Well, yeah, it depends on what you're criticizing. If you're talking about just what is okay for the market to make the market have some level of support, I think those are all very, very positive statements. Now, whether or not they're the right thing to say, I'll let other people make that judgment. But in terms of being positive for the markets, I think it's tremendously helpful.
Sandy, do you agree?
Yeah, you look year to date, you look at the protectionism and things along that nature, and you look at what's been leading the market higher, and it's been small caps, probably up about twice the amount of the S&P 500. So I think it's an opportunity on this dip today when you saw the Russell 2000 sell off about 1% to kind of have your shopping list ready and buy good quality companies. There's a big divergence between Russell 2000 growth trading at about 35 times and Russell 2000 value trading about 17 times. So I'd buy these good quality companies and hold on and enjoy the tariff situation, the trade war going on right now.
Sandy, earlier in the show we were talking about the perfect storm potentially forming for markets, throwing in a stronger dollar and higher yields as well. When do you think those factors will be significant enough to weigh on equity markets? Is it not a 2018 issue for you?
Yeah, look, I think we're going to get another 25 basis point hike this year, and probably maybe there's a 60% chance we get another hike in December. But as long as rates are relatively low and you've got a very and things are going well, just economically from a GDP standpoint, I think it's a great time to be in the stock market, and I would stay long, specifically continue to play offense and buy these younger companies that are smaller in nature.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.